Okay, happy March, everyone. It is week 10, outlook number 1. We've got a lot to look into here. Starting with the British pound futures, as you can see, we have cleared both of the liquidity points that we discussed in Outlook 9.2. The previous one was the 4-hour, or the immediate was the immediate target was the price leg that we had mitigated. The next target was the 4-hour liquidity point that we had, and then the tertiary target was the 4-hour / macro, which is the daily liquidity point target that we ultimately took out, which is the low of this price run here. And so, as you can see, the momentum is definitely still sustaining as we move down towards this low. And this is just straight out beautiful price action. Everything played out. As you can see, all of the opportunities that I have marked out, we were able to capture. And even, inside of this price leg, even though we pulled back a little bit higher, we were able to capture that move here. We had this pullback here where I captured that, and then we ran lower. Then there was another move here to end the week. And then we pulled back, and then we actually just, during Sunday evening, we just absolutely obliterated the 2 liquidity points here. So as of right now, we are still very much strong bearish. We are looking for a potential pullback, not necessarily into this price leg. We're actually looking to form a new price leg, but as of right now, we're in the impulse phase of the new price leg. Everything, and I mean absolutely everything from this high as we move lower, it to me is mitigated. All the price legs that we analyzed, these are completely balanced. This price action is balanced. All of this price action is balanced. This price leg we analyzed, this is balanced. Everything is balanced now. So any new price action that is going to, print will have to form the plays that we want to see for continuation of price action to the downside to the overall macro target, which is not this low here, but towards 1.2716. So we're really early, still in the early stages of this trade, but you can see how we were able to capture a lot of opportunities just by following the 4-hour structure and keeping the bias in mind that, yes, we are bearish. And so if you were to switch to the bias of on the 4-hour, if you were saying you were bullish here, you would see that your plays would have been short-lived. But if you were bearish, you honestly could have, from the top here, I probably should have, but you could have caught multiple positions and held them towards whatever the target. So essentially you could have had one position. I see, the positions that I had was 1 position, 2 position, potentially the 3 position, 4 position here. There's a 5th position here. And then inside of this price leg, I had an entry here, but that ended up, running. And then it got another couple entries here, then another entry here. So that's about 6, 7 positions that if I was to hold, they would be in deep profit. I ended up closing, all of them as we reached this low here, and in between as we were targeting the price legs. But that just shows you the power of, sticking to the bias and maintaining that. that bias moving forward. And so we're not going to switch up our bias. Yes, we can reanalyze now, and that's exactly what we're going to do here. Is I'm actually going to keep these green boxes on, but I'm going to get rid of this Fibonacci to show the price leg, get rid of the price leg, and I'm also going to get rid of this. But as of right now, this is not relevant anymore. What we can see here from the daily, or from the 4-hour here, is that we ran this liquidity point, which is also our macro structural point essentially for this buy here. And we have what seems to be right now a liquidity draw. We're going to have to see if the price action does give the liquidity draw, and does that action sustain, or is this simply just a run on the low and then a pullback to mitigate whatever's inside of this candle at 50%, and then we move lower, right? So because we're sticking to the bias of we're looking for downward momentum and we're looking for downward or bearish market structure here, I have inclination that we're going to see that this was the print or the balancing act of whatever the price action was here on the lower time frame, and we should be looking for price to roll over and continue to the downside. Now, the counter is that we could be looking for potential mitigation of this high here, because this is the last high, before the last low here. So if we end up pulling back, we're essentially going to pull back to perform a draw on liquidity here, because I don't really see anything that's unmitigated inside of this area. If it's going to be anything, this would be the price leg from this high down to this low, but this is really anticipatory. I think as of right now, what I'm going to do is I'm going to stick to my guns here and say that we are in the impulse phase of this next price leg, and we've run a major structural point. And so if this major structural point liquidity that was triggered does not hold, which is what caused this draw in liquidity, then we're going to have a very, very low effort attempt at running, multiple of these lows as we move towards the next major structural point here. That's what I'm seeing here for 6B and for GU. All right. So as of right now, recap, we ran this major structural point. We are now in the impulse phase of this next potential price leg, with the high being, somewhere up here, I think. And if it does, begin to pull back here, this is where the pullback would enact based off of the price action that's currently happening. If not, we're going to essentially say that this was the mitigation of whatever was inside of this area of interest here. This is the area of interest that caused the run on this low. So you can see that clearly this was a pullback to mitigate whatever was inside of here, and we should be looking for price action to continue lower. If not, then like I said, we'll pull back and create a price leg, and then we'll have to assess the price action moving forward from there. So yeah, that's what we're seeing on 6B. On gold, thanks to the attack on Iran, or the war in Iran currently, gold had a nice little pump, and that actually pushed us past our area of interest, which was kind of surprising, but not too surprising. And so it does show that the market structure was definitely looking to pull back to mitigate whatever the heck was up in here. I'm not going to do too much analysis on that, but understanding that, yes, we pulled back from technical or price action analysis standpoint, that we pulled back into our area of interest that we were looking for all along. And luckily I did not set a limit order, because that would have been bad. And I waited to see what the price action was going here. If we're being conservative, we can say that the price leg is still, or not the price leg, but the area of interest has not yet to be mitigated. The ideal mitigation would actually be, that is what got invalidated, but the conservative stop for this area of interest would actually be here. So there could be potential to say that, hey, we just went, deeper into past 100% of the usable region that we'd want, and we could be looking for potential opportunities based off the price action here moving forward to continue lower. But as of right now, I'll clear this and this. Our area of interest is invalidated, from the standpoint that we cleared the ideal stop loss, or the ideal, invalidation area, or invalidation line. And so what I would be looking for now is future price action to show that we have unwillingness to move higher, and that leads to break of structure of, these structural points, or these liquidity, these structural points inside of this internal run here. And once we get that, then we'll get a pullback to mitigate whatever, and then go lower. That's what I'm looking for as of right now, because there are no areas of interest left on this side of the premium for me to say that, hey, there's, opportunity here. There is only one thing, though, that I'm seeing right now, is the fact that this here, yes, even though we mitigated 50%, remember that 100% of an area of interest is always valid. So it is a possibility that price could pull back to mitigate 100% of this price gap that I had marked up with that green box here. But I'm skeptical of it, especially if we get unwillingness to move higher. I would more anticipate intuitively that price would give some sort of unwillingness, and then a move lower, a break of a structural point, a pullback, and then a move lower. But that's very extrapolation. That's a lot of extrapolation there. All right, so as of right now, I'm just going to sit on the sidelines for this and wait for more price action to develop. All right, moving on to NQ. As expected, we ran the internal liquidity point that was marked up in Outlook 9.2. And as I explained the price action before, I wanted to see what's happened here. Well, it looks like we have another potential draw on liquidity yet again. So all we're doing is essentially draw on liquidity, draw on liquidity, draw on liquidity. We have another draw on liquidity. And during the process of this run towards this low, we did generate internal highs and lows. And so something else that's very subtle, but also very important to see here is that right there. That action right there is a potential action, right? I don't know if it's a draw on liquidity. I don't know if it's a break of structure yet. We'll see what happens, but understanding that is a high, and then that led to the creation of a low. Then we had, a weird little high here, and that led to the low. Or alternatively, what I could say is that we have high, low, high, and then this is the low. There's a couple ways to interpret it, but I'm just going to stick with the second thing, saying that we have high, low, low to take that out, and then we're pulling back, and we've run this high here, and we've had some sort of response, but we need another 4-hour candles to solidify exactly what this action is going to be, if it's going to be breaker structure or a draw on liquidity. If it does, it'll generate, a new high if the 4-hour candle fails to close higher. And if that does happen, then that's good, because that'll show unwillingness and potential price action to continue moving lower to the downside. If not, well, then we know what happens with liquidity draws. I think we've had a lot of experience here now, seeing that once we have draws on liquidity, we end up running the previous internal high or the previous high or low after we draw liquidity to the opposite side. So because we drew liquidity to the low side, there is high potential that we end up running this high here. But because we have a potential draw on liquidity, and this would stand for unwillingness, that could potentially invalidate this action here. And if we get a draw on liquidity here, then we'll actually be looking to run this low. And these are relatively equal lows, so that's a lot of liquidity there. And then we'll be looking to run this low and ultimately the low of the range. So yeah, the markets are very, very volatile, very fickle right now. It's shaking a lot of people that are uninitiated out of the market, that don't understand how to read this price action or understand how to trade this environment, not necessarily read the price action, but trade in this environment. So yeah, just be very cautious if you are trading the NASDAQ right now. There's a lot of draws on liquidity, which is essentially just mitigation of liquidity. And if you get stuck in this, guilty as charged, I got stuck in it here, you can get trapped. And if you get trapped, you don't want to take too many trades. You want to wait to see price show its hand, which is what these actions are, is price showing its hand. And then you can base your plays off of that if you're using, this trading style. But yeah, that's it for the NASDAQ. And silver gave a nice little pump similar to gold, but I'm not going to go over that. And then the Dow Jones, the play of the week. This is exactly what I was expecting. Based off this draw on liquidity, I believe I explained in 9.2. I don't know. I didn't rewatch my video, but we essentially ran this low, and I was expecting price after we ran this low, depending on the action. If this ended up being a breaker structure or a draw on liquidity, we would end up running this structural point, and we did exactly that. And then over the weekend, we gapped down, and now we have essentially pulled back, but this doesn't matter. We have now transitioned out of a bullish run into a bullish range. Funnily enough, we have transition states. So the Dow Jones is no longer running. We have now transitioned from a bullish run, macro perspective bullish run, to a macro perspective bullish range. So this is now a ranging market. And so what we would be expecting is for now to find the low of the range and the high of the range. And just because this is the low, that does not mean that it's the low of the range. All right. And so I'm going to challenge you guys, if you're following this, to find the low of the range. You'll probably, I'll probably post it here in another video or whatever. But find the low of the range and start to see how price action plays out moving forward. But yeah, we have definitely transitioned from a bullish run into a bullish range because we broke the latest structural point, the bullish structural point. All of these lows that created new highs are structural points. And so because we broke the last one that created the last high, there is a breaker structure here. this is now a bullish range. And so we should be looking for price, to pull back in the premium, to do whatever it wants to do, fabricate some liquidity if there's no action mitigation to occur, and then move lower, deeper into the range. So don't be too surprised if price starts to drift lower here pretty soon. But yeah, hope you learned something. That's it for week 10, outlook number 1. Peace.